Hey everyone, welcome or welcome back to my YouTube channel. So in today's video, I really want to go over the Fibonacci tool and why you should use it and why it's important to use it and how I use it myself in my trading. So without further ado, let's get it. Let's go. And as always, I'm going to start off by sharing my screen with you guys. So for starters, let's go over Fibonacci. So what is Fibonacci? So Fibonacci is known and it's written in every single thing that you do. So for reference, I'm going to pop up this video here. I'm not going to play it, but you guys can definitely go through this within your own time. So Fibonacci and trading. Fibonacci refers to a series of numbers and ratios derived from the Fibonacci sequence used in technical analysis to identify potential support and resistance levels and predict price movement. And then as you can see here, it tells you the sequence. It starts with it starts with 0 and where it goes up to XYZ. Here are the Fibonacci ratios, Fibonacci retracement, Fibonacci extension, and then how to use Fibonacci. So first things first, I'm basically going to show you guys how to use this when it comes to trading, what zones to really look for, and which key zones are important that you can get solid risk to reward trades off of, and it usually pans out. And then next, I'm going to show you guys how you could use this on crypto to track where prices could go in the future, seeing that this channel is based on not only trading, but also on crypto and getting gains with that as well. For starters, we're going to look at GBPUSD. This pair works really, really well with Fibonacci retracements. And then we're going to look at Goldilocks as well, because I don't want to be biased. So those are going to be my two pairs since I normally don't trade them. So this is GBPUSD, and this also works on any time frame. But I always say the stronger the time frame, the higher the time frame, the stronger the structure. So for your Fibonacci, right, what you basically want to do just without the chart so that you guys can get a better understanding of it and of what you would basically be looking for, right? So you want to think of it in terms of this. So Fibs, it's called a Fibonacci retracement for a reason. You're going to say you're looking for a buy in the market, right? You're going to want to go from a low to high. So this makes it a lot easier for you to remember. Low to high, I'm looking for a buy. High to low, I'm looking for a sell, right? And hence the name retracement. You're going to want to wait for the market to retrace into your zone in order for you to take that particular trade. Now, there are certain zones that we pay attention to. I'm going to show you guys this on GBPUSD, and then I'll show you it on gold. And then from there, we'll go into crypto. But basically, the three things that you're going to pay attention, the three zones that you're going to pay attention to, one is called the 61.8. This is known as the golden ratio, which is usually a golden area for where your trades can be taken from. So 61.8, and then there's usually the 78/886 zone as well, / percentage for the market to go to. This is usually your supply and demand zones. So if you see a trade in this area, there's a higher chance that it'll go fully to where you want it to go. And these are like your perfect risk to reward trades, especially if you're in a trending market. And I'm gonna show you guys that on crypto. And then 50% just means basically like 50% of the move, right? So when it gets here, it can choose to basically go up or go down, XYZ. So it's kind of like a pre-warning for if you're being cautious into getting into the position. It's 50% of the level, so it's very normal for it to be there. It could go up, it could go down. Let's go over 3 examples on GBPUSD that I did take this week based on those reversals. This is more of like a swing trade kind of thing, but it does usually end up playing out. And most times it'll play out towards the extension. So as you can see here, we're on the 30-minute. Every line that I have marked on my chart is just a support and a resistance. So it's places in the chart where the market came back to play off of. So let's get it. Let's go. You're going to click here, and over here it says Fib Retracement. So I'm going to click on Fib Retracement, And then I'm going to click this. Yours will look a bit different, but I'll show you guys my fib levels. But as you can see, we're going from a high point, down to a low point over here. So the end of the move that happened right here before the market started retracing. Why? Because odds are when the market does get back to this particular zone, the market's going to drop off. And yeah. So as you can see right here, I'm going to box it up for you guys as well. We came back into the 78,886 zone. But before I do that, just in case you want my fib levels or the things that I have on my chart, this is how my chart looks for mine. This is everything I have saved in terms of levels. And you can feel free to copy that. I'll leave it on the screen. Yeah. I'm gonna put a box here, so rectangle box. As you can see, the 88.6 zone, right? So right here to right here. So usually when the market comes back to this particular area, it'll basically tell you, okay, there is potentially still sellers or buyers left in this area. So as you can see right here, when we came back, there were still sellers in this area. Hence why the market didn't really push any higher. So we came back here. And then say you were to take this trade yourself, what I would basically do, just me personally, I would take the trade anywhere within here. I usually like to take it at the 88. But say you're like, oh, damn it, I missed the 88. You could take it at the 78.6 zone, and then you could take it down here. So you might be wondering, where's your stop loss? My stop loss would be above the 100% a bit, just because as you can see, it did wick into that area. And then this would have been a 1 to 3 risk to reward. And then you could have rode it a lot further as well. But you would have to really understand support and resistance to understand where to ride it to. So if you did hold it longer, then it would have taken you out of the trade with a 1 to 5 risk to reward. And let's see, say you got into this trade on Tuesday at 1:30 p.m. You would have been out of this trade by Wednesday. So it is a lot of a longer hold, but these trades are a lot more peaceful than having to stare at screen, in my humble opinion. You would have been out of the trade by Wednesday at 5 p.m. So give or take a day to be in the trade. And if you only wanted a 1 to 3 risk to reward, you would have been out of the trade by 4:30 the next day. But that's basically one trade setup. And we're going to go over another trade setup on the same pair. And then I'll go over it on gold. So that would be your support and resistance. Supply and demand zone in this area. And then over here would be where you would try to take profits. Obviously, you could take profits on the way down if you felt like the trade wasn't really going to play out the way you wanted it to. But this works perfectly. And I'll show you another example for a buy this time. So say I wanted to take a buy, but I wanted the market to come back and retrace first. Also with the fibs, I usually like to do it in terms of the zones, the candlesticks, as opposed to doing it within the lines, because the lines don't really do much for you. I think the candlesticks are a lot better. So we're going to take it from zone to zone. So I'm looking for a buy. So low point to the high point that happened right here. Boom. And then that would be marked up. And as you can see, this one played out as well. We came back into the 100%. I would still use the fib levels as I would still use the wicks down here. So say I wanted to get in at like the 88% level. So that's my 88% level right there. And then I would take this up till about right there. And my stop loss is just going to be a bit below the wicks, right? So these things right here, because they did accumulate and there's a chance that the market might want to try to push back down and we don't want to be stopped out. So this would have been my setup. And then you could have got out the market with a 1 to 3 risk to reward. And let's just check how much time it would have taken this trade to play out. So you would have gotten into this trade at 9 a.m. on Wednesday, and you would have been out of this trade at 8:30 p.m. on Wednesday. So pretty solid risk to reward. It does take longer, as I said, And you do have to actually wait for the market to retrace / retest your zone. So that's key. But that is it for GBPUSD. And then the 50% zone is basically just going to show you 50% of the move, right? So we came here 50%. The market might want to go downwards, but usually if we are in a trending market, the market will continue to complete the whole move for you. And I had it this week where the market did do the whole move, and I usually get out, or I usually secure profits at a 1 to 2. So in some cases, like I secured profit at a 1 to 2 and I didn't make the extra 1% that I could have made on my account because I was already out of the trade, which sucks. But it's a part of life. It's a part of trading. It'll happen. It happens to the best of us. But we're going to go over gold next. So gold, for example, works pretty well with Fibs, in my humble opinion. So as you can see down here, let's see. I'm gonna do one for gold for a sell, and then I'll do one for gold for a buy as well. So right here we had the highest point, and then over here we had the lowest point right here. All right. So when the market does come back to that area, once again, there's a higher chance of the market pushing off of that particular zone and then continuing downwards. So I would just box up this particular area and see how price reacts when it gets back there, right? And then from there, basically just taking the trade downwards. So this time for gold, we are taking a short position. Let's say we got into the trade right here, and we're just going to take it down towards the end of the Fib retracement, right? The 0.0%, the 0%. And then over here, my stop loss is going to be a bit above the wicks. And then I would basically get out of the trade there. And let's see how much risk to reward. This trade would have been a risk to reward of 4, 1 to 4. So if you risked $1, you'd make $4. If you risked $10, you'd make 40, 100, you'd make 400. You get the gist of it. And then let's see something. We entered this trade at 6:30 a.m. Or you could have had a limit order set around here for 6:30, and then you would have been able to get out of this trade with a 1 to 4 risk to reward at 1:30. So not that bad in terms of time. And then as you can see, something that you also want to keep mind of is how the market reacts when it gets to that particular zone / retracement level, right? So as you can see here, the market did come back to this area and wick off of it and play off of it for a bit. But as you can see, when it started to come back to this zone, we started to lose that same sense of seller's momentum in the market. Like we had it for a bit here, it came to the 50%, and it was like, okay, it came back to the end of this zone here, and then it finally shot up. And a level that has not been tested cannot be trusted. So we broke through the 100% here. We came back to test it again before the market decided to change directions. So as you can see, we were trending down, and then the market decided to change and trend up. Now let's look at one for a buy on gold as well. And then other than that, we'll go over to crypto, and we'll basically see where we could see Bitcoin going in terms of the Fibonacci retracement tool. Low point to high point, I'm looking for a buy. So right here, all the way till about here. Boom. As you can see, this one didn't retrace as much. However, we did retrace to the golden ratio. So the 61.8 zone, you could have taken a trade off of here. Now, with this particular scenario, these are usually pretty good trades as well. And my stop loss isn't going to be all the way at 100%. I personally just don't feel like that would make sense. We retested this zone, and the market was also in price discovery at this point. So that's why I say it doesn't make sense to think that it's going to come back there. My stop loss would probably be at the next particular zone. So my stop loss would be right here. And then my take profit would have been obviously where the Fib did end up going to fully, right? So that would have been a 1 to 3 risk to reward on this particular trade. you would have entered the trade at 4:30 a.m. I'm tripping. For my people in Europe, this is for you. You would have entered the trade at 4:30, and then you would have gotten out of the trade right here at 10 a.m. So you'd have been in this trade for like 6 hours. Or if you wanted to, for my people that are in Canada or in the States, XYZ, you could have entered at 11 a.m. on Friday, the Friday that just passed, I believe. Yes, this Friday, you could have entered at 11 a.m. and then you would have been out of this trade by 12. So literally an hour spent in this trade just with the Fibonacci retracement tool. So yeah. And then say you wanted to see the market a lot better, you could also go like this and change it to the candlesticks. Sorry, the line. And then you would know where the market was going, just like that. So you have your low point to your highest point here. That's why I chose to do that fib. And then you could have also done, I'm gonna do one more fib for you guys, and then we're gonna talk about crypto. You could have also done a fib from the 61.8. This would kind of be like layering your fibs in there, right? So this zone, because we did high point, low point to the high point right over here. And then as you can see, for this particular one, we did pull back into the 88% zone, and we'll mark that one up and basically highlighted a different color so it doesn't get confusing. 88.6 level right here. The market pulled back into completely. I'm gonna change the color for that. So basically that zone right there would have been your entry. And then let me just mark up your exit for a long position. Say you got in right here, take it up till about right here for your take profit. And then your stop loss would have been a bit underneath the zone, because if it comes back underneath that zone, that I'm wrong. And that would have been a 1 to 4 risk to reward. But if you want to be more conservative, right, you could do this for a 1 to 3 risk to reward. And that is that. Let's go over to crypto and how you could basically use this same thing on crypto to basically potentially see where price could be. Let's do it on crypto just to see potentially where price could be. You could also do this on anything in particular, whether that be Euro USD, XYZ, anything that you really want to trade. You could do it and see where you think price will be in the future based on the coded Fibonacci retracement tool. So I'm going to go to the daily just because the daily has a better structure. Actually, we're going to go to the weekly. The higher the time frame, the stronger the structure. So for example, right, everything's written in code. Let me show you basically how Bitcoin was able to come up this far from where she was before. So for this point, we're going to act like it's a sell. So we're going to go to the last halving / back in 2021. So we're going to go here. No one can argue that this wasn't the high point. Okay, we have the high point here, high point, down to the low point. And then I'm also going to show you, once you do get your fibs, you can play with it, right? You can go like this. You can change it up, XYZ. For this particular one, I am going to change it back to the original coordinates for the fibs. So I'm going to go here and I'm just going to say apply default. And then you'll get your defaulted fib retracement tool levels. When it comes to this, I like to pay attention to how Bitcoin basically comes back to these levels and plays around with them. So it treats every level as a support and resistance. And that's something that you will definitely hear me say a lot because it's key. If you're not focusing on support and resistance, you don't really know what to look at when it comes to crypto, and also what to look at when it comes to your charts, right? So as you can see within these fib levels right here, when we broke down, in order for us to come back up to the 100% of the move, we had to slowly, gradually come up there. We broke out of this percent, and then we came back down, tested it, came back up, tested it, came back up, pushed down a little bit, stayed in this area for a little bit of weeks, tested it. So this is why people say crypto is boring, because it don't move, but it does move. and then came back here, tested it, we pushed off of it, came back here, and then we pushed off of it finally again in 2024, right? So that took a long time. But what I'm basically trying to say is everything's written in the code. A level that has not been tested cannot be trusted. So with that being said, we came back there, and now basically everything above the 100% is known as a extension. Okay, so it's an extension, meaning that the market could possibly come here, right? And then obviously as the market does come to these areas, the market will retrace off of that area. So as you can see right here, I'm going to mark it up for you guys. What did we do? We came to, is that 100K? We came to 100K, and what did we do? We played around that area, and we basically retraced off of it, right? Also over here, as you can see, we basically did the same thing at 69K. We came, played off of it, tested it as resistance, 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 and then we finally broke through it as support. And then as you can see, the next level potentially is going to be 155K. I have a feeling that by the grace of God, we will get there. It's just going to take a lot of time, right? Like we're playing around in this area. Once we break out of here, we'll see if we test it as resistance still. And then we could break out towards the top, back to right here. This was a zone as well in something called a time-based Fib extension. If you guys want, I can definitely do a video on that, but we won't be going through that today. But definitely let me know in the comments. And then as you can see, the zones just continue to go up right here as well, 206K per Bitcoin. And then over here, we have 239 per Bitcoin. So those are basically the extensions, and it's written in the code, and they will usually most likely be hit. The market will definitely have no problem going from 100K where we were before to 200K. Like, it's inevitable. I know that it's going to happen. And then last but not least, since gold was in price discovery, we can also go over gold and see where gold could possibly be weeks from now. So with that, we're going to look at the weekly, and we're also going to say, okay, cool, gold, where was the highest point and where was the lowest point? And just for shits, I'm going to do this in 2021 as well. And we could see that every level basically did get hit, not to toot my own horn or anything. So here we have a high point down to a low point here. This was the lowest point that the market did come to before continuing to shoot back up, okay? So as you can see, there are zones here that the market will potentially hit. Obviously, this one is not as dated, but as you can see, right, the market did come back and hit them within these particular zones. We came back here to the 100%, tested it as resistance before we pushed off of it. We ended up hitting 23,000 per ounce, came back, tested off of it, pushed up to the next zone. How convenient that we pushed up to 27K per ounce for gold. Wow, that was a mouthful. Okay, per ounce for gold. And then we came back and we retested it. How convenient that we did that. And then as you can see over here as well, when we came into this zone, the market did test certain areas of this zone as well and push off of that zone also. But the next potential zone for gold to come to and test is going to be 31,118. We'll see if that holds true in the near future. I think it definitely will. And by the time you see this video, I think it will. Let me know if it did. I'll probably let myself know if it did once I post, before I post this. But I'm going to label it white. Oh, we're going to change the color to white, actually. Hello, to white. Okay, so that's the potential zone that gold can go to. And then from there, the last potential zone that I do see happening in the near future is right here at 33.73. And I think that's going to be crazy. But that is pretty much it for this video. I would love to know what your biggest takeaway from this video was. What was the thing that you learned the most about, that you will definitely take into your trading in the future and be consistent with, because consistency is key. But yeah, thank you so much for watching. I appreciate each and every single one of you. And until next time, I will see you guys in the next video. Peace.